On to market themes. So as we learned, risk sentiment and also risk on, risk off. So risk sentiment, of course, is are we going to be buying risky assets, or are we going to be buying less risky assets? Is there any sort of wars happening? Which specific currencies am I going to be buying? Is there any sort of wars? Is there any sort of political issues? Is this short term? Is this long term? So as traders, you must, use your brain here. It's not as easy as just drawing a couple of lines on the charts. We have to use our brains. So we'll move on to market themes. So this is quite important, I think, especially during the type of market we're in at the moment, which of course is 2023. Themes are always developing. What the Fed is doing, what's the ECB doing, what's China doing, how's Australia going to benefit, how's CAD, what's Bank of Canada doing. There's all themes that's always developing. So we're going to go over just some couple of examples of themes, and we'll go to some more of a more relevant theme like China, for example. So at this point, we are all aware of what it takes to determine a strong and weak economy when looking at the raw data aspect, i.e., what Drew's gone through: GDP, inflation, interest rates, etc. We are also aware that risk sentiment is the only factor that can throw fundamentally strong economies or currencies to the floor and pick up fundamentally garbage economies or currency and throw it into orbit. Now it's time to discuss market themes which tie both fundamentals and risk sentiment together. Every market has a theme. It allows investors to speculate. They love speculation. Investors just love to jump on board any sort of news. They'll jump on board instantly. If you start to see someone, I don't know, some of us might have seen when there was speculation about Elon Musk. If there's any sort of speculation about Elon Musk, people buy it or sell depending on if they deem it good or bad. Instantly, regardless of if it's just maybe a news article or somebody might have said it in a potential press conference, for example. They love speculation. Themes are what investors use as a base when building a thesis as to why a currency may strengthen or weaken. Themes can come and go. You may have a local theme or a global theme. With examples, the above will become clear. So, like we said, local themes might be specific sort of to the economy itself. It doesn't really impact other people. Or global themes, for example, when we're starting to see a theme develop in China, which we'll get into later, about them recovering. That's a global theme. That helps a lot of people. That helps risk on. And so this is just adding everything together now. Just, this is a thing to add to your toolbox, and definitely start looking into this. This is something that a lot of traders miss. So now it's important to understand themes aren't always surrounding a risk event. For example, let's take the reopening phase and actual recovery and expansion of the global economy post-COVID. After the risk event was priced in, economies reopened, the theme naturally became who is growing and expanding at the strongest and fastest rate and who is lagging. To gauge this, global investors turn to interest rates as a proxy of growth. The higher the interest rates go, the more economies were trying to call off inflation due to spending habits of consumers. To reaffirm this, investors tracked consumer confidence, retail spending, employment, and/or unemployment levels to track the level of aggregate demand within an economy. And those who are growing and strengthening at a faster rate than others, their currencies increased in value over economies who are lagging or struggling to recover. And they U-turned out of the risk event, of course, at that time was COVID. So let's look at the aftermath of COVID-19. So from what we learned in risk sentiment and risk on/off, what happens after such events? The biggest tip we can give is the market participants love to speculate. It means that they can get into or in on a move prior to anyone else, which ultimately means more profits for their portfolio. Markets hugely speculated specific currencies to strengthen due to their vaccine policy. This meant that the economy will expand quicker than everyone else. This is an example of market speculation. So if they start to see that, I don't know, for example, we'll get into an example right now, which is the UK. So the UK had one of the fastest and best vaccine policies just after the 2020 COVID event, people bought into that speculation that the UK was going to recover at a faster rate. They were going to increase their GDP. Their inflation was going to rise. That meant interest rates rise, which is good for the currency. So all of this speculation, just from the news and the people and the government just bringing out all of these, what they're going to do and how they're going to do it, people bought into that speculation. So like I said, speculation is such a big thing in the market. People don't really realize how important it is to understand. So after the COVID, markets were heavily eyes on who will recover. The UK was once the first to roll out vaccines. Alongside, they were the fastest in immunizing the population. This then meant faster exit of lockdown restrictions, meant faster economic recovery, and then guess what? The currency strengthened on the back of this theme that was developing. It's important to understand that we must identify any theme that develops in the market and we must respect it. Below is obviously GBPUSD of the market buying into the theme and speculation, which basically happened all here. All of this buying, of course there's going to be pullbacks, etc., but all of this buying was due to that speculation. So we must respect it. So even if the fundamental data at that stage was really, really, really poor in the UK, people didn't care too much about that because they understood that, okay, yes, the data is poor now, but what does that mean in the future? So the markets are always forward thinking. So they'll think, okay, well, they're getting their vaccines, people are able to go out and spend, then that means they're able to, lockdowns are going to be eased. That means it's full economic, the steam or the engine's going to start going again. And that's just meant markets speculated into that. So let's look at another theme that happened during the war. Since Russia is a large exporter of crude oil prices spiked due to political pressure from current countries around the world. Of course, they were banning export from Russia, of course. What does that mean? It then means the supply, there's less supply in the markets now. Then oil spikes. As a result, you can say CAD then spikes as a proxy to that. So as oil exports are banned from Russia to agreeing countries, oil prices spiked through the roof. Oil exporting countries like Canada and Norway benefited from this. But what we have learned in previous lessons, this is what's known as a short-term risk event. Oil prices can't be spiking forever, and the market would have priced in all of the risk in a quick amount of time. So, as we saw here, this is a prime example of a very short-term risk event. So if you saw Russia invading Ukraine, you think, okay, well then it's likely, we start to see then US start to step in and say we need to ban oil exports. We then saw European countries like Germany, France, the UK, etc., saying they're going to ban, the production of, or the production line, shall we say, where it distributes to, of Russian oil. As a result, you then think, okay, well, all this supply has been taken out, oil prices spike. Okay, now that could be a trade there. Also, another trade could be, okay, well, CAD then would benefit, NOK also would benefit from this. So, but you also remember that, okay, this is all going to be short term, it's not going to be really long term, positioning, is there? So as you see here, oil prices spikes basically in 1 week, in a week and a bit, 2 weeks, and then it kind of recovered, then pulled back, and then there was, of course, all the issues with COVID in China that drove the prices lower. So to simply understand oil, you just have to look at supply and demand. Of course, you can look at OPEC, risk on, risk off, etc. But oil is pretty much supply and demand driven. And of course, CAD strengthened on the back of that. You could argue, though, war being a big war happening in would potentially be risk off. So why didn't CAD weaken? Maybe because of the commodity. But then also look what happened after. It weakened off further. So let's look at the China reopening story. So this is more of a theme that's developing in right now in 2023. A thing really started to develop quite, very, very late 22, and then it's really been driven in 23. And more relevant, as I said, some of us were China was reopening their economy in 23. But guess what? Markets are already buying currencies and asset classes that benefits from their current economy getting back onto its feet. This means more businesses globally, better GDP from China, and commodities prices behind to pick back up due to demand. So as traders, we must follow where the speculation is and where potential themes are developing. And of course, this is going to be a long-term theme. China had such a big issue for such a long time that drove Australian dollars really, really low for, like we know, Australia is very, 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 sensitive to China. So We must follow the speculation, and we have to understand where potential themes are forming. Without it, you will likely struggle to understand why certain currencies are strengthening, even if fundamental data suggests it's meant to weaken. So you may be looking at data in, for example, Australia, and you might think, oh, well, you've got all this issues with this data here and this data there points down, but this points down as well. I need to be selling Australia, but why is it strengthening? You have to be looking at what the themes are. You must incorporate everything, and then that will tell you whether you want to be buying or selling the currency. And then you look at the chart. If you have a fundamental bias of, I want to be longish AUD/USD, you really shouldn't be looking for sales. You should be looking to get in a long position. That all, of course, is dependent on the data, the risk, the themes, etc. It takes a lot of work. So as we saw here earlier, what we read with risk on and risk off, iron ore is very, very sensitive to China, right? Because China buys iron ore from Australia and then uses that to purchase or to build steel, and then they use that to build infrastructure or sell it abroad. So as a result, we saw AUD/USD pushing higher. Of course, China reopening is bad for the dollar anyway, so that just helps AUD/USD up go much further. If we look back, if I was able to get the whole chart in, if we look back and if you go onto your trading view now, look at the relationship between iron ore, pushing down from May 22 all the way down. I know AUD/USD was basically all the way up here, like bang, 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 pull back, bottomed out here. That's when we start to see a dollar reversal. You then saw the reversal in the dollar. China started getting better. People bought into speculation that dollar then is going to start beginning potential cutting rates. It's a recession. China's reopening now. People buy into Australia as a result of that, etc. Interestingly though, we aren't actually seeing people buying into Canada because of the oil demand. But like I said, it's the fundamental data that is really dragging Canada quite low. So it's important to use our brains a bit here and understand that trading is going to take a lot of time. So of course, if you do want to get in touch with us, ask us some questions, please, our email is here, our Instagram is here, and our website is here. So by all means, contact if you want to develop your fundamental understanding much further. So thank you again, and I'll see you in the next session.